Do. All right, everybody. Welcome to the Friday Senior Solutions Agency call. My name's Joe Johnson. I'm going to be your host today. I'm on here with my good friend Michael Mahalik. Michael, let me do just to introduce you real quick. Michael Mahalik, not only a good friend, National Agency Director, Senior Solutions, and he's going to be bringing some good things to us. We got a great call lined up for you. And the thing that Michael and I, one thing we really take serious, and we do this call every single week. If you're watching this, obviously, like I said, this is a live webinar. We get a lot of these webinars that we do. If it's good content, something we want to share with the public, we put it out on our YouTube channel. So you may be watching this as a replay on YouTube. Certainly appreciate that. Do us a favor, go ahead and subscribe to the channel. Michael and I put out content pretty much every single week, except for maybe a few holidays here and there. And sometimes our travel schedules don't allow us to do the call on Friday, but I bet you probably at least, 48 out of the 52 weeks, we're probably putting some type of content out there, whether it be sometimes it's inspirational, sometimes it's product knowledge, sometimes it's sales techniques, sometimes it's a little bit of both. And our goal every single week is to bring you value and to bring you information to help you increase your sales. That's what we're all about, is pulling together and making sure that everyone is achieving the common goal of helping as many families as possible, and at the same time helping you, the agent, build up your nest egg, your pocketbook. You know what I mean? Your wealth. And with that, Michael, let me go ahead and turn it over to you. I know there's some things that you definitely want to cover before we get into the main topic of the call today, which is I'm going to be covering how to, and I know I've covered this before, but I think it's something that you always need a good refresher on, because if you're not doing it, I think sometimes, Michael, I think people skip a step because they don't understand the importance of it. It could be like, well, why am I doing that? Like when I was in the car business and I was learning how to sell cars, they had some dealerships had a 7-point sales presentation, the other had a 10. They broke it down in different ways. But for me as a sales agent, I always wanted to understand why, not this is what I should be doing, but why should I be doing that? And once I kind of got the concept, it was like, oh, that's why you do this. And then it kind of clicked, and I'm like, man, I better not skip a step because they're all really super important. But with that, let me go ahead and turn it over to you, my friend, and take as much time as you need, and then I'll cover the 3-option worksheet and contrast selling with our sales agents.
And definitely, Joe, and one thing I love to share with people, especially people underneath the Senior Solutions umbrella, and even when I was with the parent company, your insurance group, I always told people, if you cannot make it with Senior Solutions and the final expense, mortgage protection, annuities arena, which we're in, and we're getting ready to get in other arenas too, but that'll be another call, you're just not going to make it, because we actually have a system here, ladies and gentlemen. And that's the beauty of systems. What was AT&T's motto, Joe? The system is the solution. Well, the Senior Solutions system is your solution. And me and Joe are always here to go through that with you. Joe's gone through a very important piece of the system today that I really want everybody to pay attention to. So that's the what. We got flip charts. We got the starter kit. Again, Joe, just like a soldier would never go on the field without a gun or his canteen or his compass. Going out in the field without the Senior Solutions starter kit is the equivalent of that. So that's the what. But Joe, you touched on something very important I want to sort of expound on, and that's the why. And as a Christian man, this is my belief, and that, Joe, we're responsible for our families even after we pass away. And everybody, that's the beauty of the insurance business. Where else can you build passive income that can still keep paying out even after you're gone? Look at your family. I've got grandkids now that we're on the very beginning of that journey, obviously, but look at them, look in their eyes. You want to leave something behind. And as a Christian man or whatever religion you are, I truly believe we're still responsible for our families. once they're gone. So we've always got to ask ourselves, what's the starting point to start building a business that can not only pay us now, but can pay us passive income in the future? And Joe, I can't remember what his name was, very important a business guy, said every business has one thing that you need to focus on. As long as you stay focused on that one thing, everything else falls into place.
Make the main thing
the main thing.
Yeah, the main thing, yeah.
And a good friend of ours, Brian, which I later found out, Joe, he got it from Tom. You know, we all have mentors that taught us so much. Really shared the one thing with me, and this is sort of consistent across every IMO and many insurance arenas, especially in the final expense arena which we're in, and that is 15 presentations a week. I want everybody, even if you're there, to write that word down, presentations. We're in the business of giving presentations because we're in the business of helping people. And we help people in this business by fully educating them on what all their options are as it pertains to taking care of our final expenses. And our presentation is the vehicle that we use to help people, to educate them. But Tom and Brian both shared with me, Michael, that, you know, we always share this with the agents. Just think about, you know, now we've got some young ones on this phone, Joe, so they may not understand. There used to be this thing called a newspaper, and this thing called a newspaper used to be this thing called classified ads. And I remember, Joe, getting the Sunday paper on Saturday here in Atlanta because you could, I wanted to get on top of those classified ads. So picture this classified ad in the newspaper. 6-figure income job, only requirement, give 15 presentations a week. And everybody, again, I want you to visualize that because I know Nat and some guys like that. There's a lot of people on the phone that are in our age group that probably did used to look at those classifieds, whether it be the Chicago Tribune or the Dallas Morning Paper or the Atlanta Journal or the Nashville paper. And it says in there, 6-figure income jobs. So my eyes, Joe, with all about it could be on that. Financial services, only responsibility, give 15 presentations a week. Ladies and gentlemen, that is the one thing in the final expense industry I just shared with you. If you can get into double-digit presentations every week, everything else is going to fall into place. I was on the phone this morning with Kay, and Kay and I were talking about the tag team method. I know I'm in the South, maybe it's everywhere, Joe, but a lot of you used to watch wrestling, and you tag your partner, they come in, help beat your opponents. You know, we're even willing to do, the tag team with you. You get in the house, me and Joe are here for you to call and walk you through it. But you're part of this commitment is you got to get into double-digit houses. Maybe it starts with 10, then 12, but you want to get to 15. You don't even have to start at 15, but it's a proven fact in this business. If you give 12 to 15 presentations a week, I don't care how new you are, how rusty you are, the numbers are going to take care of you in this business, okay? So our job here at Senior Solutions is to put a strategy together with you to get to that number. So let's talk about the two building blocks of getting to presentations, 15 presentations a week. Number one is activity. Number two is lead flow. I'm sorry, ladies and gentlemen, we're looking at productivity and performance of an agent. Joe, I don't know any other variables we can look at. What's their activity like and what's their lead flow like? We had some people that call us and they want a lot of mentorship and working with them, but me and Joe always have to share the same fact with them. We can't steer a car that's not in motion. And motion happens from activity. This is an activity-driven business where there's no activity, writing applications without activity, just seeing the people. And to get there, you got to have lead flow. Joe, I've shared this over and over. Fact in self-employment, not just insurance, every morning you wake up without someone to see, you are unemployed. Because insurance, like any other self-employment, is performance-based. For you hunters out there, you only eat what you kill. So those are the two building blocks of you getting to 15 presentations a week. First, you got to make sure the activity is in there. And I get this question a lot, Joe, and from the part-timers, can I do this part-time? Well, yes, but you got to do it part-time, full-time. When you're out there doing this part-time, you got to have one full day of being out there. It's much better to work 2 full days than to work 3 or 4 half days. And what I mean by that is we've talked over and over again, and one thing we probably don't put enough emphasis on, but I want to start doing more in the future, Joe, is those beautiful little delivery notices. I know, Joe, when I was out in the field, I'd say 50 to 60% of the business I wrote came from those delivery notices. And Joe's getting ready to show them right now.
I always have them handy. Can you see this?
Yes. Just like a UPS or FedEx driver, if you weren't home, they'd stick that delivery notice on your door. The same thing you're going to do, because let's face it, it's the law of probability. These people aren't always going to be there. Maybe they're up at Walgreens getting the prescriptions. Just face it, Joe. How many kids live with their grandparents nowadays? So those grandparents are shuttling these kids back and forth to school now. But if you're only working a half day, only putting a half day of activity in, you're going to miss a lot of opportunity, because here's the normal scenario. You're there in Oak Park, Illinois. You knock on Mrs. Smith's door. She's not there. What do? You fill out that yellow delivery notice tag. By the way, I would stock up on those, ladies and gentlemen. You stick them on the door. Maybe they'll get back home at 4 or 4:30 that afternoon. And at that point, they're getting a delivery notice and they're calling you. Well, if you got your activity in and you committed to really commit that activity all day long, you're going to find out that you're running a lot of business between 4:30 and 7:30. So those delivery notices are so important. So first of all, activity. You have got to have activity to make it happen in this business. As I share over and over with you White Sox and Cubs fans out there, this business is a lot like that game of baseball. You're going to win some, you're going to lose some, and some are just going to get rained out. But you're going to miss every ball you don't swing at. And that comes from activity, just putting that in. And really, what we've seen over and over, we've really proven in this business, is eventually what you'll start noticing is a pattern in your business called the law of thirds, or the principle of thirds. Where a third of the people, you're going to get in the door simply because you were at the right place at the right time. Call it luck. I don't believe in luck, Joe. I believe those opportunities come to those people who work hard. Another third, ladies and gentlemen, I don't care if it's Tony Robbins at the door. He's not going to sell them. You're at the wrong place at the wrong time. Those last third are based on your skill set.
Yeah.
So when you're putting that activity in, ladies and gentlemen, that law of thirds, principle of thirds is going to start coming into place, and the numbers are just going to take care of themselves. Because once you start understanding that, ladies and gentlemen, you can start taking the pressure off of yourself and start putting the pressure where it really belongs, which is on the numbers. But to get to those numbers, ladies and gentlemen, we have to come to a logical conclusion, and that is we got to have people to see. So the second thing we said, the second variable of giving presentations is what? Is lead flow. And this is really where the strategy comes in, because you're going to need a certain number of people to see on a weekly basis to put the principle of thirds into place. As we've already told you, a third, you're not writing probably no matter what. That last third's on your skill set, but if you're brand new, you may fumble some of those as well. So you've got to have enough people to see on a weekly basis for you to put those numbers on your side. So position yourself for success. It's not the best salesperson, Joe, that wins. It's the best positioned salesperson that wins. And again, go back to the Tony Robbins example. Tony Robbins has 5 leads to see. You have 30 leads to see. You still win because you have more times at bat than Tony Robbins. And there's where Senior Solutions really specializes in that. It's coming right alongside you, because we know without a proven and time-tested marketing and advertising system, you will not make it in final expense. And Joe, that I might have to repeat that. I think it's that important. Again, without a proven and time-tested lead system that puts you in front of people who have an interest in what you have to say, you won't make it in final expense, and you won't make it in self-employment. Because last time I checked, Chick-fil-A doesn't make it without chicken, Sherwin-Williams doesn't make it without paint, and McDonald's doesn't make it out without hamburgers. And those, when their product runs out, they're out of business, and you'll be out of business as well. So those are your 2 building blocks. And again, that's why I always stress on these calls, Joe, that one of the most important things someone can do after these calls, Joe, is do a call to action. And the call to action is you send a text to Joe and me about having your very own strategy call. Working backwards. We know we got to get you 15 presentations a week. We know that activity and lead flow get us there. So what type of lead flow do we need? And if you're brand new, your strategy calls could be a lot different than someone who is who's a seasoned professional. But that's the great part about Senior Solutions. We'll work with people who can barely spell final expense all the way up to people that have been doing final expense for 45 years. We're here for you, because as we always say, she's on the screen, you're in business for yourself, but you're not by yourself. And that is truly Senior Solutions' commitment to you, because we don't win until you win. So as I wrap this up and let Joe sort of get into the meat of the day's call, just remember the one thing of final expense is 15 presentations a week. And again, to you old timers out there, just visualize that newspaper, visualize it in your hands. You're feeling that newspaper, and there's that employment ad, 6-figure income career, responsibility, get 15 presentations a week. So everything we're doing, ladies and gentlemen, is always going to be really garnered around or built around you getting the 15 presentations a week. Because Joe and I know, as well as every other expert in the conference arena, that when you get to that magical 15, everything else just falls into place. And it's all about activity and lead flow. So please reach out to us. Let's get that strategy call and let's get you started. So Joe, did I leave anything out or anything you'd like to add in?
You didn't leave anything out, but there's just a couple of things I want to just to add. And the ad analogy about the newspaper ad, very impactful and spot on. I just want to bring up another analogy, and I don't remember exactly where I was, but it was, I think it could have been a webinar I was on or an in-person meeting or whatever the case is, but something very similar. And the picture is that you're in a room, like a sales meeting, face-to-face meeting. There's a agency manager up in the front, and everyone's lined up like in side by side, like theater style seating. And the manager up at the front says to everybody, all right, I want everybody to reach under their chair, and taped under your chair there's an envelope. You pull out that envelope and you open it up, and there's X amount of dollars in there. Let's say it's $4,000, okay? And the manager says, the great news is that you can keep that $4,000, okay? All you have to do is go out and make 15 presentations this week. Are you willing to do whatever it takes to make 15 presentations to keep that $4,000, okay?
Wow.
Some will, some won't. Here's the thing that I've come to the realization, Michael. At the end of the day, there are no shortage of leads. There are plenty of leads out there. There's no shortage of leads. And the reason why is because there's no shortage of prospects. Let me ask you this question, Michael. When are we ever going to run out of people getting old? When are we going to run out of people turning 55 or 65? When is that number going to happen?
As long as we have time, we'll never run out of it.
Never.
As long as this earth is spinning, and as long as this earth is turning, people will be getting old.
It's only going to get bigger. I know we talk about the baby boomer. Okay, the baby boomer generation, what is it? I don't even remember now. I've said it so many times. How many?
10,500 people turning 65 a day. 1946 to 1964, I believe.
Right. Okay, 1964 to whatever, 80 something, early 80s is Gen X. Okay. Guess what, guys? There's about 3 times more Gen X's than there ever were baby boomers. Okay. I know we talk about the baby boomers, and granted we should, because those people turning 65, but there's even a bigger wave behind the baby boomers. The thing about the baby boomers, to be honest with you, they really weren't great savers, okay? There's a lot of them, and a lot of them need the services that we provide. There's another generation, people my age, your age, Michael, that's coming in right behind the baby boomers called Gen X. And there's probably at least 2 to 3 times more, because you think about, what do the baby boomers do? Baby boomers had a lot of kids too. You know what I mean? So there was another explosion that happened after the baby boomers, and that's Gen X. So we're never, and the Gen Xers, first Gen X is born in 1964, so they would be 58 years old. So those Gen X's are just now getting into their late 50s, in a few years going to be turning 60, 65. So in 5-7 years, you're going to have the first Gen Xers turning age 65. That wave, my friends, is going to be even bigger than the baby boomer generation. They're going to be needing our products and services. So man, we are never, ever going to run out of people to see. What we're short on, Michael, the shortage is not prospects. The shortage are people willing to work. The agents that are willing to do whatever it takes to go out and run 15, 20 appointments a week, minimum 12. I was talking to a guy that I introduced to the business probably, God, you've heard me talk about Tom, right? Northwest Indiana.
Oh, I sure have.
Dude, this guy, he rolls out of bed and writes $3 grand. I mean, it just, I say I trained him. I can't take credit for his success because he's just, he's really awesome. But I can take responsibility for his initial training and getting him out in the business, and the rest was just his talent and his unbelievable work ethic. But I just had a conversation with him the other day about lead flow. Tom has come to the point where he does not do the fixed cost lead pricing anymore. He just does the per thousand. So he finds the cheapest rate that he can get. He uses Needle Lead and I think Lead Concepts. And he told me the other day, he goes, Joe, he goes, I don't care who responds. He goes, I'll even use, sounds crazy, but he'll do a mail drop in the exact same zip codes with 2 different lead houses. Okay. And I said to him, well, don't you get duplicates? He goes, very rarely. He goes, you would think that you would get a lot of duplicates. He goes, I might get 1 or 2 duplicates in the same drop. But if I get a duplicate, they filled out 2 lead cards. He goes, that's a guaranteed sale right there. You know what I mean? So that's like a guarantee. He told me he's spending roughly about $2 grand a week on leads. Okay. Which seems like a lot. Okay. But I know he's also writing just north of $400,000 a year in business. So
Wow.
you got to ask yourself, would you spend $100,000 a year in marketing to make north of 400 to net 300? In my book, 300,000 is a pretty good income. Okay. Even if you cut that in half, would you spend 1,000, invest 1,000 a week to write just north of, let's say, if you cut the numbers in half, just over, I guess 200, maybe 250 to net 150 or 300,000. And I know back in the day when, when I was a full-time agent, my average lead, my lead bill was anywhere from, I don't know, 50 to about 60 grand. And that was for about $250,000 worth of production while building at the same time, being a full-time producer, meaning running business 3 to 4 days a week, not 5 days a week, and then recruiting and building the rest of the time. I guess what I'm circling back to is the fact that there are plenty of people to go out and see. There are plenty of prospects. Direct mail is still super viable. That's still my #1 go-to. All of our top agents are running direct mail. Right behind direct mail, you can get age direct mail. You can also get internet leads and Facebook leads as well. At the end of the day, however it is that and we can have a one-on-one, this talk is not going to be about specific marketing strategies. We want to do that more on a one-on-one basis, because it could be something with your specific area or geographic area that we may point you in a different direction. But at the end of the day, the point is that, man, you've got whatever marketing plan you're going to take, whatever it is, that marketing plan has to be able to get you out where you're making a minimum of 12 to 15 presentations a week, meaning you're having a sit down with a client where you're actually able to make a presentation. So with that, let's go ahead. Let me get a quick time check, see how we're doing. Perfect. What we want to roll into next is the idea of what we call contrast selling. Now, if you Google or if you go to YouTube and type in contrast selling, there's tons of videos out there about different types of contrast selling for different products, services. There really aren't that many in relation to insurance sales. There's a lot to just kind of like general sales and what is concept or contrast selling, I should say. What I want to talk about real quick on contrast selling is that and without getting into a lot of details, but the human brain is inherently programmed to look for little differences. In other words, our brain is programmed to look for contrast in our environment, and our brain is always aware of what's going on. That's just how humans are. That's how we're programmed. There was something in preparation for the call. I was watching a couple of different YouTube videos, and one of them was talking about the difference of contrast, and they made this comparison. If you were to get, let's say, like 3 buckets of water, the one on the left was like hot water, the one on the right was like super cold water, and the one in the middle was like room temperature type water. If you were to dip your hands into those buckets of water, the hot and the cold, leave it in there for a minute or so, and then put it into the room temperature water, the sensation that you would get, there's such a contrast. The one that was in the hot water, when you dip it into the warm, the sensation you would get compared to the other. That's a contrast that we notice. Other things about contrast selling, I know real estate agents use contrast selling all the time. They've been doing it for years. They'll have a prospect that is in the housing market, and they'll take them to a house that they know they're probably not going to buy because it's run down, it needs a ton of maintenance, and it's overpriced. You know what I mean? It's like, oh my God, this is what I can get for $500,000. This is like crap. And then they show them another house that's maybe in a different location, maybe a little bit further out, that's pristine, that's had everything done to it, and it's basically the same price or a little bit higher. That's kind of a contrast selling. Going in one thing about contrast selling in our business is that it only works if you show the highest price first, then the lowest price. What it doesn't do, it doesn't work to show a client something really cheap. In other words, like if you're selling insurance and you're going to do a 3-option worksheet, and your idea is like, well, let me show them something really cheap first, then I'll show them something more expensive. It doesn't work. Okay. It's like going in, if you were going to buy, like if you need to buy a new suit or a new dress or an article of clothing, and the salesperson, for a guy anyway, you probably realistically, I mean, it's been a while since I bought a suit, but I would say you probably realistically can't buy a decent suit for less than, I don't know, $300-400. Okay. You can get suits that are less, but they're going to be crap. Okay. For a lady, I mean, a super nice dress, I'm guessing is, at least $150. So the point is, if you go into a clothing store and you say, hey, I'm looking for a dress, and then that salesperson, without asking you anything, just shows you like the cheapest dress that's there, or a suit. Let's say the suit's on sale for $99 and it's just crap quality. The dress is $50 and it's just not very nice. You're going to look at that suit, you're going to look at that dress and say, $100, this is like crap material, polyester. I don't want that. And then, oh, well, let me show you this $400 suit. In your brain, you're already thinking, I don't want to spend $400. And then you walk out, the guy doesn't make a sale, or the lady doesn't make a sale. Okay. On the other hand, if the guy walking into the suit store and the salesman takes him, oh man, we just got this new material in from Italy. This is like, we can custom tailor this, boom, boom, boom. Here, I can put this together for you. And he's measuring you and all that and asking you a lot of questions. Say, hey, this suit is on sale for, $1,200. Oh my God, $1,200, man. I can't, a little bit out of my price range. Okay, maybe you step down and then you're buying the $400 suit, which is still really good quality, and you feel like you got a deal because it was a third of the price that was, or of the suit that was $1,200. That's contrast. Showing something super expensive, then showing something that is in the same quality range but less expensive. That's what we do that's the importance of doing the 3-option worksheet. And I just wanted to bring that to everybody's attention because I want to make sure that you understand, why do we do the 3-option worksheet? Why is the 3-option worksheet so effective? But the 3-option worksheet is only effective as if you have a contrast, okay? If you're doing a 3-option worksheet and you're showing 15,000, 10,000, and 5,000, that's not enough contrast. You need a big contrast. If they're eligible for same-day coverage, you need to be showing the option 1 to be $35,000 or more. Some carriers go up to 40,000. I usually use 35,000 because of the lead cards that I use. If you're doing direct mail, most of the lead cards say 35,000. You may qualify for a state regulated program up to 35,000. Okay, and I know just about every carrier allows 35,000. So that's just me. I'm kind of programmed to show 35,000. And then the middle price I'm usually doing around 20,000, and then the last price I'm usually showing around 15 or 10,000, and depending on their age. So again, if I've got a client who is 85 years old, it may be a little bit different, but I'm talking about a normal client who typically we're getting people in their 60s and 70s. In order to do the 3-option worksheet and to utilize this contrast selling, I'm just going to share my screen with you, and I'm going to do a screenshot. This is a share that if you're using FEX Toolkit, there's an option there to do a comparison, okay? And you're not comparing different carriers, it's the same carrier. This particular carrier, well, it says Living Promise, so I guess it's Mutual of Omaha. This part, it really doesn't matter the carrier for this. But so if you're doing it on your phone or you're doing it on a tablet or a laptop, what it's going to do, it's going to give you, I'm going to do the 3-option worksheet, so I have this. Now, me personally, I'm just telling you, when I do the 3-option worksheet, I never, I'm not using a tablet or my phone to show the client. I'm only using my phone to run the 3-option worksheet. When I do the 3-option worksheet, I still like writing it down on paper, okay? I'll use my phone to calculate all the numbers, but I'm actually going to write it on a piece of paper. So what I'll do is I'll run it on my phone or the tablet to have the numbers, and I know what I'm going to be presenting. So in this case, Michael, I think my client's about 72 years old. I've got a Living Promise with the accidental. It's $214 for, you can see, for 35,000. For 20,000, it's $124, and for 15,000, it's going to be $93. You can see the contrast. Look at the contrast between 214 and $93. My point is that $93 seems a lot more affordable compared to $214. So even if the $93 is out of their budget, your client is still more likely to go with something in the $60 or $70 range versus telling you, oh, I can only afford, 35 bucks a month. Okay. At the end of the day, the client's going to let us know. We're going to payment close them based on what their budget is, but you want to have that contrast. So here's what I do. I take the numbers that I'm using on that I'm getting from FEX Toolkit. There's two different versions of the 3-option worksheet. There's the YIG version, and both these options are available on the Senior Solutions website. If you go under agent resources, you can find them under they're actually in 2 locations. They're in the front of the website for printable forms, and it's on the agent resources under, I think, sales materials. But anyway, if you go under agent resources, you'll definitely be able to find it. This is the one I like to use because if I'm doing a presentation and I have a husband and wife, you can see there's an option here to put the you want to call it the primary or secondary insured, the husband and wife. You can list both of them, and then I can give a total price. On the one, on the other one, it only gives you one. There's only one space to put it in there. So if you have a husband and wife, you kind of have to break it down. This way, I can show both of them. And in some cases, I may be using different companies. So maybe for the husband, I'm using Mutual of Omaha, and maybe the wife, I'm using CVS Aetna, or maybe I got to go guaranteed issue or something. But this is what the 3-option worksheet looks like. Doesn't really matter which one you use. Just use one, and use the one that you feel more comfortable with. My personal recommendation is use the paper version of the 3-option worksheet versus using your computer screen. It's just something about, our clients are still old school. There's still something about actually writing numbers down, putting in their hand so they actually have something that they can physically see and they can touch, and you can kind of explain. This does a little bit of a better job of explaining things as well. Now, before I get into it, I'm going to show you how I price everything out. But the important thing is that before you get into the numbers, okay, you've got to memorize this statement. It's in the magic formula. And Michael, Michael, you're still there, right?
I'm here, my friend. Got my pen and pad out learning.
All right, I'm starting to lose my voice a little bit. Unfortunately, when I was down in Florida, I developed a little bit of a cold, so I still have a little bit of congestion.
I understand, my friend.
So hopefully I don't lose my voice here. Okay, so before I do, when I'm gonna transition into doing the 3-option worksheet, and I'm sitting there with Michael, this is what I say to Michael. Michael, what I'm gonna do next is I'm gonna show you what most people are doing in your situation. But Michael, I need you to promise me something, okay?
Okay.
And I just want you to promise me is that if what I'm showing you does not fit into your budget, that you're gonna let me know. Can you promise me that?
Sure thing, partner.
And the reason why, Michael, is because if what I'm showing you does not fit into your budget, we can make adjustments. And I promise you, I will find a program that will fit into your budget. And Michael, wouldn't you agree at the end of the day, isn't it better to at least have some coverage in place than nothing at all?
I sure would.
Okay, guys, if you're not doing that, you are missing the boat. I'm just telling you, you got to get your clients on board that they're going to promise you. And the reason why is because when you show them the first 3 options, in the cheapest option is $93 a month, but their real internal budget is $40 a month, you're more likely to get them to say something like, well, this looks good, Michael, or this looks good, Joe, but let me think about it. Okay, then in reality, what they're telling you is that it's too expensive, and I'm too embarrassed to tell you that even your cheapest options is twice as much as I want to spend. Does that make sense, Mike?
Now 100% makes sense. It's always about the money.
It's always about money, and you want the conversation to be not that I want to think about it. You want it to be about the money, because we're, at the end of the day, we're payment closers. We're selling value. And the great thing about what we're selling, it's not like selling a car where you got to take out less options or you got to buy a cheaper car. And well, we can put you into something that doesn't have power windows, door locks, or power steering. You know what I mean? All of our products have the same benefits and features. The only thing that makes them different is the premium, is the face amount. But the value of the product is exactly the same, what they bring to the table. So I'm starting out with a blank 3-option worksheet. Then I'm going to go over, and what I'm going to do is I'm going to write in option 1, which I've already predetermined based on their age. My client, Mary Jackson, 72 years old, I think. 35,000 is the maximum I'm going to show, with $70,000 of accidental, and the insurance company I'm using is CVS Aetna. Okay. And the plan information is first day coverage. So what I'm basically going to do when I go over the 3-option worksheet with Mary or Michael, and after I get, Michael has already told me he's going to promise me that if what I'm showing doesn't fit into his budget, he's going to let me know. I'm going to say, my next thing I'm going to say is that, Michael, you know, I am required to show you what the maximum coverage available is under these state regulated programs. So Michael, based on your age, currently the maximum amount that we could offer would be 35,000, but it would include $70,000 of accidental deaths. So whether that were a car accident or a prescription drug overdose, Michael, as long as when you passed away, the death certificate said it was an accidental death, this would actually pay out double and would pay $70,000. The company, Michael, that I'm going to be quoting you that came up with the best value and the most discounts was CVS Aetna. I'm sure you've heard of the CVS pharmacy.
Oh, definitely have. We get our prescriptions there.
Yeah, this is backed by the same company, and it's underwritten by Aetna, which is one of the largest insurance companies in the world. So you know that we're going with a good coverage here. Also, Michael, I just wanted to let you know all the plans I'm going to be showing you, as long as you qualify, but based on what you've already told me. Because remember, guys, I've already pre-screened Michael. He should fit into day 1 coverage. Michael, the plans I'm going to be showing you are what we call day 1 coverage. That means you're going to be a 2-year waiting period. After your first premium is processed, this coverage is going to go in immediately. And then, Michael, I know I already covered this with you, but just to recap, I'm going to go over the 5 guarantees, guys, just to recap, just to build a little bit of additional value. Michael, like I said before, all the programs I'm going to show you are affordable premiums that are going to be guaranteed never to increase regardless of your age. The death benefit is guaranteed never to decrease. The death benefit is paid guaranteed tax-free. It's guaranteed never to be canceled due to your age or health, unlike other plans. And Michael, lastly, all the plans I'm going to show you are going to have guaranteed cash value that accumulates over time. And best of all, Michael, like I said before, there's no medical exams. And again, that's why I'm here as the state licensed field underwriter to help get you qualified. So this would be the option number 1, Michael, is 35,000. Now, what I want everybody to notice is that I'm not filling in any pricing, okay? Leave the pricing till the end. Option number 2, all we're doing here is building value. Michael, option number 2 would be for 20,000. Like I said before, based on your current age at 72, your life expectancy is at least another 10 or 15 years. Based on Social Security, they're estimating funeral costs in 15 to 20 years or 10 to 15 years should be somewhere probably around 20,000. So this would cover you for $20,000, more than enough to cover for rising cost and inflation. $40,000 for accidental, and of course it includes all it's the same coverage, Michael. It has all the same benefits. It's just we just lowered the face amount a little bit. And lastly, Michael, option number 3 is 15,000, and that's based on what we know historically, what currently average funeral costs are today, anywhere from 10 to 15,000. Of course, Michael, if you were to do something economically like cremation, that's only a couple of $1,000s. As you can imagine, even with 15,000, there would be plenty of money left over. And just remember, Michael, is that we don't name any funeral home as the beneficiary. This money goes directly to your family, so they have the freedom of choice to make sure that they're getting the best value, just depending on what you decide you want to have done, and for that to coordinate with your family. So I lay out the 3 options, then I go back in and I fill in the pricing. Remember, I've got everything right on my phone, so it's so easy to do it. So Michael, For the 35,000, what you would need to set aside on a monthly basis to fund this program would be $214.71. The second option, the 20,000, Michael, you guys can see I'm filling this in here. The second option would be for the 20,000 and $40,000 of accidental. Michael, you would need to set aside $124.07. And Michael, lastly, the $15,000 program, you would just need to set aside $93.85. But Michael, you tell me which of these three works best for you.
Well, Joe, that one in the middle looks good.
Boom. Okay.
Well, I think that fit nice into our budget.
He closed himself on the 124. Great. And Michael, just to confirm again, provided I do get you qualified, you get approved, who is it that you wanted to name as your beneficiary?
I want my son, Christopher.
Christopher. And what's his date of birth?
5/7/2004.
And then from there, guys, what I'm doing is I'm gathering information. So when I go into my e-application, I can have everything at my fingertips. And Michael, just refresh my memory. When do this 124 is going to be coordinated with your Social Security? Tell me again, when do you get your Social Security?
I get the third Wednesday of every month.
The third, okay. And then Michael, who do you bank with?
Wells Fargo.
Wells Fargo. Hey, Michael, do me a favor. I'm gonna have on every time I do this, I have a paper app from one of my, and it doesn't matter who I'm using. It could be, I could be using a Mutual of Omaha application, but maybe I'm going CVS, or I'm using a CVS application and I'm going Mutual of Omaha. It doesn't really matter, because the information I'm writing it down as I'm gathering information, I'm writing it down on the application, so I can take that information and transcribe it back into my e-application. But what I'll do is, he tells me, oh, he banks with Wells Fargo, great, and we're gonna have it come out on, what'd you say, Michael, the third Wednesday?
Third Wednesday.
All right, I'm gonna take on every application, there's a section for EFT, okay? I'm gonna take that page, I'm gonna turn it around to Michael. Michael, could you do me a favor? Here's a pen. Could you just write down our account number and routing number for me?
Oh, sure. Honey, give me a bank statement. My wife's getting it here.
They're gonna go get it. So instead of me asking for it, I asked Michael to write that down.
A lot of agents are real nervous about that, Joe, so you make a very good point. And Joe, I want to revert back real quick on your verbiage of this is the amount of money you need to set aside each month. Ladies and gentlemen, language makes a difference. And there's certain words that, hey, Joe, this is what this is going to cost you every month. Joe, this is what we're going to snatch out your bank account every month. Yeah. Compared to what Joe said, this is how much you need to set aside every month. Be getting this verbiage, ladies and gentlemen. Watch this again, the verbiage and the word plays that Joe used and make all the difference in the world in your presentation. This is a very crucial part of the presentation.
Make a difference. You know what I mean? And it is, instead of saying, hey, these are your premiums, this is, like you said, this is how much we're going to suck out of your bank account
every month.
Say something like, hey, this is what you need to set aside, or hey, this is in order to fund your program, this is what you need to set aside, whatever you want to do, but stay away from words like premium or cost or, anyway, so that's, something I learned from a pro a long time ago. Now, we know that not everybody is gonna go with your first three options. We know that, okay? But remember, and I'm going to teach you a transition. There's a couple different ones, but there's one that I really like, and that's where the client says, well, I'm not sure, I need to think about it, or, so let's role play into that, Michael, and let's just assume that I do these three options, and the $93 a month is like way out of your budget. Give me, come up with a good, an excuse why you're not buying, and I'll overcome that.
Well, Joe, I never do anything without first sleeping on it.
Oh, but Michael, I totally understand that. Now, you went a little bit of a different direction, but that's fine. I'm going to handle this. Michael, I understand that. I appreciate that. And you should sleep on this. After all, this is a huge decision that you're making that's going to affect your family. Michael, out of curiosity, with 30 to 45 days, does that give you enough time to make a decision?
I would say so.
Okay. You know, and let me go back, Michael, because I apologize. I think I forgot to tell you this, and that is we can't get the cart before the horse. And what I mean by that, Michael, is that you couldn't actually buy this program today, even if you wanted to. This is simply just the application process for me to get you approved. How it works is that I simply just gather the information, and as the state licensed field underwriter, what I'm going to do is I'm simply just going to apply with the insurance company to see if we can even get you approved. If we do get you approved, Michael, the first premium wouldn't even be for 30 to 45 days out, which gives you plenty of time to decide whether or not you would want to move forward. But Michael, at the end of the day, and then I may transition to something like that, see what kind of response I get. And the other thing I'll say is, like, Michael, you know, I got to tell you, I've been doing this a long time. And when a client tells me that they want to think about it, that usually means is what I'm showing them really doesn't fit into their budget. And I'm kind of getting the feeling that the $93 is maybe a little bit more than what you wanted to budget for. Am I correct?
That's correct. Yeah, it's a little snug for the budget.
I understand. Remember, Michael, before I showed you the three options, I said that, you know, if what I'm showing you doesn't fit in the budget, to let me know, because we can make adjustments. And I think you said agreed that at least getting some coverage in place would be better than nothing at all.
Yes.
Okay. So a couple of things I want to go back on, guys, as a teaching point. One is that if you tell the client that you're getting the feeling, you can pretty much say anything you want. It gives you permission. I'll give you an example without offending anybody. Michael, I'm getting the feeling what I'm showing you is maybe a little bit over your budget. Is that offensive?
Not at all.
Okay. But if you were to rephrase it, it's like, well, Michael, it's only $93 a month. That you can't fit 93 bucks into your budget.
I'm already on the defense.
You're already on the defense.
Yeah.
Okay. You could say anything. Hey, Michael, you know, I'm getting the feeling that you really don't like me. Oh, what's your response going to be? You know?
Well, Joe, I do like, Joe, I hope I didn't offend you there.
You know what I'm saying? It's just so get that little word track into your cell system as that, hey, I'm getting the you know, the feeling of whatever it is. Okay. You know, maybe they're not comfortable with the company regardless. Okay. So I'm going to go back. I'm going to say, you know, first, when Michael says me, he doesn't do anything tonight, I'm going to handle that rebuttal by saying he can't buy this program today anyway. It's simply just the application process. Again, we can't get the cart before the horse. You heard that whole story. And then I'm going to go back and say, Michael, I'm really kind of getting the feeling that what I'm showing you doesn't fit in the budget. He agrees. My next thing I really like to say, Michael, and I use it all the time, I simply ask the client. Now, one thing I'm going to tell you is that I never ask the client what their budget is. Never. Okay. Not directly, but indirectly I will. Michael, out of curiosity, what did you expect a program like this to cost?
Maybe somewhere between $75 and $100.
Okay. You see what I'm saying? So instead of saying, hey, well, what's your budget? You know, you could say, well, what could you have set aside comfortably? I just asked the question, would you expect this to cost? You know, and it works. They always give me, I don't know, 30 bucks, 50 bucks. Okay. So whatever number, now, Michael, I know you said like 75 to 100. Actually put together, I already kind of wrote out a couple of things. So do me a favor and just go back and say, oh, maybe around 50 bucks.
Maybe
Okay.
somewhere around $50. That probably fit comfortably into our budget.
Okay, around $50. All right, Michael, based on your budget and what you can afford, let me just simply show you what most people are doing in your same situation. Okay, so I'm lumping him in to other people in the same situation. So all I'm going to do, and this is the other reason why I like using the paper version of the 3-option worksheet, I'll just take my 3-option worksheet and I'll flip it over to a blank page like this. And what I'll do is I'll just handwrite on there 10, and because on FEX toolkit, I'll put in there, if Michael says $50, I'll do a comparison on my phone. I'll plug in $50, I'll plug in $60, and I'll plug in $40. And I'll see which face amounts get me the closest, and then I'll kind of round it, okay? So in this example, so Michael, based on your budget, I can tell you, this is what most people are doing in your exact same situation. They're either going with somewhere between 6,000 and 10,000. Let me show you what you would need to set aside. So Michael, for the $10,000 program, which by the way, comes with all the exact same features as the $35,000 program, is that you would need to set aside on a monthly basis $58.46. The $8,000 program is $47.40, and the $6,000 program would be $36.35. Michael, you tell me, of these 3 options, which one of these works best for you?
I'm saying, Joe, that middle option of 47.40 is hitting the nail right on the head.
I was kind of getting that same feeling, Michael, that you were going to pick the 8,000. And tell me again, who would you want to name as your beneficiary?
My only son, Christopher.
Christopher. Again, I'm just doing the same drill downs. I'm locking in the application, verifying, hey, who would you want the money to go to? What's Christopher's date of birth? Do they live at the same address? What's Christopher's phone number, Michael? And Michael, refresh my memory again. Who do you bank with? Oh, Wells Fargo. And you get your Social Security when? Okay. Here, checking savings, and I'm closing the deal. Okay. So this is how we do it. Okay, guys, the 3-option worksheet utilizing contrast selling. Now, if you notice, when we get down to these 3 options, these are a little bit closer together. We've already done the contrast, and we've already narrowed down. The client's already given us a budget of about $50. So we've kind of already narrowed that down. So when you do the final, so you do the 3-option close backed by another 3-option close. I'm always giving my clients 3 choices. But if you notice on the last option, there's not quite a big of a contrast. And what you'll do is you'll get a lot of clients say, oh, my budget's 50, but I'd rather have 10,000, for an extra $8, I just assume just to get the 10,000. I like that number better than 8,000. So keep those last 3 numbers a little bit closer, a little bit more in check. So with that, Michael, that pretty much wraps up our call for today.
Hey, Joe, one thing before we go, and I know we're running a little late here, but ladies, Joe, I hope you know something here with Joe, is all about setting the stage up front. When he got the agreement from the very beginning, that if they're not comfortable with those premium plans, they will tell him, because some coverage is better than no coverage. And guess what? Even when you do that, most likely they're still going to forget, and you're going to bring it right back up. Remember when we talked about before we did this, Miss Meredith, you agreed with me that if you could not afford one of these 3 options, you bring it up to me, because we both agreed something's better than nothing. Yeah. Miss Meredith, what is comfortable and affordable for you? So Joe, it's all about setting the stage. Don't get yourself in the hot water if you don't have to. And if you set the stage properly, life's all about positioning. You're going to avoid a lot of the obstacles up front, because you've already got their agreement that they will tell you if one of these 3 options is not comfortable and affordable for them. And then you've also got their agreement that, hey, something's better than nothing. As we always tell clients, I've never seen a beneficiary return a benefit check.
No, never.
So definitely, ladies and gentlemen, it's all about wordplay in the way you set it up. So Joe, just phenomenal again. And everybody, please watch this video over and over again. Joe, I'd say this is probably one of the biggest areas that agents screw up in. So please go back.
It's one that they take shortcuts in because they think it's not that important, and they want to get right into the budget and, hey, what can you afford, or whatever. But our if you do the 3-option worksheet properly, one thing I guarantee that you'll notice is that your premiums will start your premiums will start going up because you're building more value. Okay, so if you're always starting your clients just showing them, you know, 5, 10, and 15, you're going to get very few clients that ever do 15,000. But if you start out at 35,000 and end at 15, you'll get a lot more that will take the 15 option versus the, you know, the $5,000 option for, you know, 30 bucks a month or whatever it is. But anyway, Michael, thank you so much, sir, for being on the call. Guys, again, appreciate everybody. And we will get this, we've got it recorded, we'll get it processed, and we'll get it up on our YouTube channel ASAP.
Thanks, everybody. Remember, I don't care if you've been with Senior Solutions for 12 years or 12 days, we're always available for those strategy calls. It's never too late to restart your business. Sometimes the best way to fix something is what, Joe? Unplug it and plug it back in.
Reboot, man, reboot. I reboot all the time.
If you're struggling out there, if you're not where you need to be at, unplug it. And unplugging is simply calling me and Joe saying, hey, I want to revisit my strategy. Can we go into this right here? And everybody, always remember, you're in business for yourself, but you're never by yourself. Senior Solutions is with you every step of the way. Everybody have a great week. Thanks, Joe.
All right, man. God bless. Take care. Bye-bye.